also have Mr. Vikas Khemani, founder at Carnelian Asset Management, joining us on the show. And Vikas, hi, morning. Thanks so much for your time. And of course, the market chatter, the big news this morning is the tariff imposition. Now, while India Inc. is gearing up for the impact, where do you gauge this impact could be? How much could it be? Because as we understand and as our experts have told us earlier, this may or may not be the final figure for us. Vikas? Okay, I believe we've snapped that line and we'll try and reconnect with Vikas in a bit from now. Well, yes, all eyes are going to be on the kind of tariff impact that we're expecting to see back home. We've had experts earlier in the day who've joined us and told us that this may or may not be a final figure, given that we also have a US delegation that's going to be visiting us in late August to try and renegotiate this entire 25% number. And in fact, the bigger overhang right now is this 25% number, of course, but the penalty that India has been imposed for its trade relations with Russia in terms of oil, crude, and also defense goods. So that number is a variable as of now, and it's going to be very important to watch out for that. But I believe we have Vikas back with us. And Vikas, hi, morning. I was just asking you about what kind of impact do you think India Inc. could have to be in store for right now and could have to prep for, given this number that we're seeing, 25% prima facie, but this again may or may not be a final tariff number.
Keep in mind, these are not the final tariff numbers. Of course, the tariff negotiation can go for a very long time. So to some extent, I think last quarter also there was uncertainty and the volume drop in the companies focused on exports to US, because whenever there's a policy uncertainty, it is bound to happen. And I'm sure we will have probably at least another quarter of uncertainty around that. I'm not saying that US exports will collapse, no, but there is uncertainty, and that can have quarter or two of the impact on the earnings of the companies exposed to the US. Rest all depends on what final outcome comes out. But I do believe that the kind of context which is there, everybody's being levied at least 25% kind of range. So it's not like, significantly negative. Everybody would be levied. But having said that, you would want definitely slightly favorable terms. But it is not easy for any negotiator because these are very long, important negotiations. And I'm sure government is acutely working on that and being working at keeping in mind all the interests. So I think to some extent, maybe we might have a quarter or two of uncertainty on those sectors, companies which are exposed to US. And beyond that, I think, in my opinion, nothing changes because overall exports to US is only about 80-90 billion dollars, which, in the overall corporate earnings contribute a very little. So I don't see major market structure level any risk. But some of the companies might get impacted, some of the segments might get impacted, which could be also temporary in nature, depending on the final outcome is.
We've got the pre-open rates. It's a 200-point gap down for the Nifty. But Vikas, purely from an equity market point of view, you think the cat is now out of the bag? I mean, we've lived in uncertainty for months now. At least now the equity markets know the worst that to price in, and they will be very quick to digest should the worst-case scenario of 25% tariff be slapped on us.
Absolutely. I think it's a fair point you are making that, your worst case scenario, which anyway, in my opinion, markets, I don't think we're expecting anything worse than this. So you know your worst case scenario, you know the impact. And after that, you do your assessment and move on. And like I said, at a structure level, overall Nifty level or markets level, it's the impact on the earning based on this may not be very, very significant. Of course, some of the companies who are planning to, get big growth from that market would have, impact from a shorter term perspective. But I don't even think that even that would be structural in nature. Because China plus one diversification is a strategy which most companies are following, and it is here to stay for a very long time. And more importantly, I think India is a domestic consumption story, which is far, far, bigger and better than the export story. And that story continues to remain very solid. India's infrastructure built out story that remains solid. So I think our own import substitution cycle itself is a very strong. As long as we address to that itself, I think is a great story. So I'm not saying that we should not have a great deal, but I'm saying government is, I'm sure, acutely aware what to give and what not to give. Like they negotiated UK FTA. I'm sure this will also be done in a few months' time or a few quarters' time, depending on how progress makes. And I'm sure most countries are in that boat. So I will not still read any structural negative on this.
Yeah, absolutely. But, the only thing, Vikas, is that there will be that impact for sure, especially for garment manufacturers, exporters, some of the chemical companies, because they have that double whammy of China as well, on which there is that big question mark. Do you think that this will push the central bank perhaps to be more aggressive than it already has, even after the 50 bips bazooka that they fired last time around?
In my opinion, both are completely not linked at all because I think government has done, at least, sorry, RBI has done a great job in terms of, front loading 100 basis point cut. And I don't think that's required. Partly two things. One is that this tariff does not have to be absorbed by the company. So some bit of it, of course, might have to be taken by the company in a shorter term. Eventually, it will be passed on to the US consumer. Secondly, also, we must understand a little bit of comfort for the exporters comes from the depreciated rupee, which we saw yesterday also, a little bit weak rupee. So I think partly that gets compensated. So assuming that this is like a very big scale, negative for everybody is will be wrong. Of course, there will be marginal negative for people who are exposed to US. And I'm sure, government will come out the plans with the give some targeted incentives to those companies or segments which are getting impacted. But I'm sure they are not happening in a hurry. They will happen, in due time and due course. That's what my expectation would be.
Nifty banged down 400 points, by the way. The mid-cap index down 700 points. That's the Nifty mid-cap 100. Nifty small-cap down to 32 points. That's a 1.25% cut. And Nifty 50 down 170 points. And that's down 0.6%, 24,685. Pretty much all sectors are bleeding red as we speak. I must say, though, it's in line with what the GIFT Nifty was indicating and what it adjusted to, and then what the implied open was throwing up this morning. But Vikas, the only thing here is where the FII flows will move. While the domestic institutions have been providing that cushion to the equity markets for years now, that liquidity is really not a concern. But I was just looking at the July data. Out of the 22 sessions, FIIs have been sellers, and on some days, big ones for the last 17. You think the flight off of FIIs, that could get a little bit risky for us?
Really don't think so. That is anyway, happening in a hurry. I think, in the sense, I don't think so. Because of this event, FI will move out. No, I think as the Fed rate starts coming down, you will see FIs coming back, in my opinion. India is, if you look at in a global overall equities portfolio, India is still underweight. And I'm sure if you take structural view, it will again change. But technically, I think probably, we might be here and there. But this particular event will not change any view for India because India is far bigger domestic story than export story. No FI comes to India because it is an export story. So I think that in my opinion is not going to change anything.
But Vikas, let's also have your take on the pharma space as well, because as we know that you have been bullish on this particular space, and of late the earnings have been quite robust. But this with 25% tariff as a blanket that has been announced, though Donald Trump has made it clear that pharma tariffs will be separate, and along with that he's talking about a 200% rather. Do you believe, given the stance on India right now, there could be some challenges in times ahead for the pharma space as well, given such a big exposure of Indian companies in the US?
Technically speaking, there might be a quarter or two, but structurally speaking, no. For the simple reason, I think most of the Indian, companies supply generic drugs to US, which is I think about 45% plus market share of US medicines in generic form. Which I think, if let's say the tariff is that Indian companies would pass on with the 1 or 2 quarter of adjustment a little bit here and there, because there's no case for these companies don't make that much money. So, and secondly, these pharma companies are not making some great ROC for them to absorb any kind of such tariff. So I think what Trump is talking about on the big 200% tariff is on main innovator drugs where US prices are far higher than the one in developed market. That I don't think India is suffering from at all. And secondly, even if US were to do, let's say, there's no other place where US can shift their 45% more market share or wallet share of their supplier to somewhere else overnight. Right? It doesn't happen. So there's a capability which has got built. There are supply chain issues. There are lots of issues. So I think, in my opinion, with the quarter or two of adjustments, I think companies will pass on those tariffs to the end customers, and then US customers will have to absorb that.
So, Vikas, what is the message for investors? I mean, we've all known that But I think it's getting more and more resounding, that thought now. Stay put with domestic linked sectors. Is that the view?
They would put invest continue to believe in India. There's nothing very changing because of this, the Indian story. Indian story continues to remain. This kind of tactical risk will come. See, first of all, we don't know. This is only one, and we have seen kind of rollbacks happening. We've seen negotiation happening. So this is not a permanent sort of verdict. And I'm sure there will be one treaty which will be done because US and India both needs each other, both has to work with each other. I think those kind of negotiation tactics will happen, like we have done with other countries, right? So here the complexity of the given the size and nature of the economy is far more involved. So I think that will happen. Uh, Other than that, an overall impact of this particular event is not big. Even if it is permanent in nature, is not a very big one. India's story is far more robust than only this aspect. Having said that, I do believe this will also be sorted out. So continue to remain invested. Even I'm not actually turning and saying that export-oriented stories 2 years are also not sort of going away. So they will remain that. Just don't panic in this kind of times, in my opinion. That's the only advice I can give.
Oh, yeah, absolutely. We've seen a lot worse, right? Many wars, COVID, who can forget all those times? But Vikas, just, talking about some sectors, I think the bigger niggling worry is what Trump had to say about Russian crude imports. They come at a little bit under risk. They're going to be hitting our energy security. And the US-Russia balance now becomes increasingly difficult for us. Do you think the refiner margins, that's going to get threatened with this potential oil energy security crisis, if I can call it that?
See, again, look, there are a lot of political statements made, there are a lot of rhetorics. And I don't know the real implication, how Indian government will react to that. See, so far, I know that Indian government has been very firm in handling the national interest and the inflation and the domestic economy. In worst of the time, Indian government is held very, very strong. So I do believe it really will depend on how Indian government reacts to that, response to that. Given my understanding of, I'm sure India has, there are negotiation tactics from both sides. And knowing Mr. Trump, he always has all his cards put in public domain and then kind of try to scare the other side and put pressure on the other side. So all those things are normal negotiation tactics. I do have full faith in our current government's ability to negotiate and get the best decision in the overall interest of the company. I have zero doubt on that.
Sure. But what's the big picture right now, Vikas? Because you will see that knee jerk, and I can see that on my screen as well. Most of these stocks are reacting right now. Textile, apparel, some of the chemical plays. You think, wait for the dust to settle down and then approach these sectors with a fresh view? Is that the message to the investors? Because they will take their time to digest should this 25% tariff get implemented, that hit.
Absolutely. I think there is no point of reacting anything, even if see sectors, companies which are getting impacted, they will anyway buy down today, right? So you anyway kind of paid price for that. So rather than reacting, in my opinion, just wait for dust to settle down. We have seen many times rollbacks. We have seen the things changing very often. So I would say that just don't overreact right now. Stay put, and there will be opportunities from this, and there will be a bit of challenges. So and that. As an investor, all the time you have to deal because I don't know anything where an external environment don't change. It changes all the time. Sometimes commodity prices, sometimes interest rates, sometimes even customers going bankrupt. So all those things are very very par for course, natural happening. As an investor, we have to deal with it. And I would say this is one of those one more event. We'll deal with it and I think move on in our overall long-term growth wealth creation journey.
Domestically, though, Vikas, and I know you track this very, very closely, which is why I'm picking up pretty much on each point. You think earnings softness back home, that's a little bit of a niggling worry?
Really, I think in fact, I said in previous conversation that what RBI governor has done is far more important than what Trump is doing. Our big story just think about it. In 100 basis point interest rates have come down, liquidity deficit has become liquidity surplus. And in a story which is far more domestically aligned, and with the continued capital flows into the domestic market of equities, I feel, in my opinion, the earning it is a story which will continue. In the earning squeeze which we had, or earning slowdown which we had last year because of the liquidity squeeze, is it's changing, right? It's already kind of back on table. So I do believe that H2 second half of this financial year we will see a good robust recovery happening unless something major drastically changes on the policy. Let's see. I mean, we'll have to watch, but I don't think there's a major risk to the earning growth. We think that 13 to 15% earning growth is very much happening in this year.
So far in the earnings, Vikas, anywhere where you've recommended to go overweight or underweight or remain neutral? Any changes that you've made looking at the earnings this quarter so far?
Not much. I mean, we continue to. I mean, it's because of this quarter, we have not changed anything. I think we had significant overweight in the banks, which we kind of reduced a little bit, but not that we had very large weight. So having played out, we kind of reduced and looking some of the more consumer names, some of the more names where there's a lot of growth and value coming through. So these are the technical adjustments we make all the time, but we've kind of reduced a little bit of our overweights. And we are still overweight, but a little bit of weight is on the banking side.
Because if not banks, where do you think the next pool of leadership is getting created?
Look at what L&T numbers are. I mean, so in my opinion, the kind of infrastructure growth story continues to remain that. According to me, that segment is still fairly ignored by the market and the overall, you can see, infrastructure led or especially the EPC companies doing very well. So the point I'm trying to tell you that of course banks will continue to do well, but there are lots of so consumer can, in my opinion, surprise on the given the rural demand, rural monsoon doing well, rate cut happening can surprise on the positive side. According to me, sector has not done well for last 3, 4, 5 years. So you can see some positive coming through there. So and anyway, I mean, you don't need the IT. I think given the rupee, if you see order accretion of all the IT companies has been very, very solid, and given rupee, you might see some more comfort coming on the earnings side. So all you need is 3, 4 decent side segments to kind of lead, and markets can deliver that.
On that hopeful note, Vikas, thank you as always for your time and good to gather your insight as always.
That is mine. Thank you.
Okay.